tax. So we're going to look at turnover tax. Tomorrow we'll look at capital gain tax. You have those theoretical topics notes. You have those notes with you. So tomorrow we'll be discussing on supply chain management in public entities. So you will go and read about it. Then you also extract questions of that particular topic, supply chain management in public entities. So you go and read about supply. I've given you the notes. Supply chain management in public entities. So you go and read about this one, public entities, supply chain management in public entities. Uko na hizo notes, ndio? Na uangalie. You also look at questions on the same. So today we want to look at turnover tax. So right there, turnover tax. Turnover tax. Turnover tax, you written there. Turnover tax in bracket TOT. TOT. And then you write, is a tax charged, turnover tax is a tax charged, on gross sales of a business, on gross sales of a business, on gross sales of a business, as per section 12C of the Income Tax Act, as per section 12C in bracket C of the Income Tax Act, as per section 12C of the Income Tax Act. So the tax is payable, by resident persons, whose gross turnover is more than 1 million, is more than Kenya shillings 1 million. But less than 50 million, but less than Kenya shillings 50 million in any given year. So in other words, if your business is making 1 million sales in any given year, the total sales in a year is 1 million, and less than 50 million is supposed to pay turnover tax. So the effective date of TOT means turnover tax is 1st January 2020. It's 1st January 2020. So turnover tax is charged at the rate of 1%. Turnover tax is charged at the rate of 1%. Turnover tax is charged at the rate of 1%. Turnover tax is charged at the rate of 1% of the gross sales. So the due dates for filing and paying turnover tax is on 20th day. The due date of filing and paying turnover tax. The due date of filing and paying turnover tax. The due date of filing and paying turnover tax is on 20th day. It's on the 20th day of the following months. is the 20th day of the following month. So now what are we saying here? We are saying if you're doing a business and your sales in that business, turnover means sales, you expect them to be more than 1 million. You know your business, isn't it? So you pay 1% of your gross sales. You pay it on monthly basis, isn't it? You take 1% of the gross sales as turnover tax. So let's look at the income exempted from TOT. Income exempted from turnover tax. Income exempted from turnover tax. Number one is employment income. Employment income. Employment income. Number two, rental income. Rental income. Number three, management and professional services. Management and professional services. Management and professional services. Management and professional services. Number next, persons with business income below 1 million per annum. Persons with business income below 1 million per annum. Number five, any income subject to subject to final withholding tax, to final withholding tax. So that is what you need. And then let us look at the penalties. Let's look at the penalties. So turnover tax, TOT, late filing and payment, late filing and payment. Late filing and payment is 1,000 per month. It's Kenya shillings, 1,000 per month, with effect on 25th of April 2020. Late filing and payment is 1,000 per month. Not late file. Okay, you can delete this one. Late filing is 1,000 shillings per month, not filing and payment. Late filing is 1,000 shillings per month. Then number two, late payment now. Late payment penalty. Late payment penalty is 5% of the tax due, 5% of the tax due. And then number last, interest on unpaid tax is interest on unpaid tax is 1% of the principal stroke tax due. 1% of the principal stroke tax due. So what are the benefits of turnover tax? benefit of turnover tax. Number one, it reduced time for filing and paying taxes. Reduced time for filing and paying taxes. And number two, reduced expenses, among others, reduced expenses. So now in a nutshell, you need to understand what we mean by turnover tax. So briefly, what we've written down, we're saying we have a tax called turnover, and it's payable by businesses with a turnover of 1 million and less than 50 million in a year. So it is paid 1% on monthly basis on the gross sales. 1% of your monthly sales, of your gross monthly sales, isn't it? And you need to pay it by 20th day of the month following that of sale. You need to file a return and pay the tax. Tumeelewa? In turnover tax. So most of the things we have covered, except those ones that require theories, the ones that require computation, except tomorrow we'll be doing what we call capital gain tax. Capital gain tax. So now we're going to embark on our revision. And our revision, this is how we're going to be doing it. We'll be spending some time. We discuss those theoretical questions. We'll be spending some time to discuss those theoretical questions. So theoretical questions, you put more emphasis. There is a public finance. Public finance. You need to read it again and again. And then we have the public debt management. You read it, public debt management. You have those notes. And then number three, we have public-private partnership. And then number four, we have custom and excise duty. And number five, we have administration of tax. Administration of tax. And number six, we have introduction to taxation. Introduction to taxation. So 1, 2, 3, 4, 5, 6. So those notes are there. If you don't have, let me know so that I can share and you start reading. So tomorrow I'll give you read in advance so that we brush through the questions. So tomorrow kindly go and review a topic called supply chain public entities. You go through that and then you also look at questions. So tomorrow we'll be doing that. And then now you can also find time, you can go through custom and excise duty. Okay. I have the notes. If you don't have the notes, you can come and I'll give you. So you go through these two things, those two things. Then probably next week, you repeat those ones. And then now we do particular area. For those ones that require computation, you can just select an area randomly and then we do questions. So we have recently done VAT, but we'll review. So today, which is the most suitable area for us to revise on the calculation? We want to do some calculation here, 1, 2 questions. Business income and due, partnership, overheads. Which one? Partnership. Yeah, so we can do some partnership and business. So we'll do a question on partnership. We'll revise on questions on partnership. So revising question on partnership. So we can do December 2021 question number 4B. December 2021 question number? Unasema? Ataniacha? Gani hiyo? Hii ya December 2021. Unataka gani? Unataka gani? December 2021. So December 2021 question number 4B. December 2021 partnership business. So we are doing December 2021 CPA, December 2021. So we're partnership business, CPA, December 2021 question number. So Jessica and mother establish a partnership business, sharing profit and losses in the ratio of 3:2 respectively. The following is the income statement for the partnership for the year ended at 31st December 2020. Additional information number 1, and sales or increase of value added tax at the rate of 15%. Number 2, closing stock was valued at 1,840,000, while opening stock was 10% while opening stock was 10% of sales, net of value added tax. Both stocks were undervalued by 10%. So legal expenses comprised, you have been given the breakdown. You have legal fees on defense against alleged breach of contract. Then we have repairs, you've been given the breakdown of repairs in note number 4. Note number 5, general expenses included impairment of patent rights, 144th, provision for general bad debts, 148, and drawings of goods by partner. Interest on loan include number 6, interest on partner's capital, which was shared according to profit and loss, required taxable income for each partner. So here we write here the name of partners. So Jessica, so you write here Jessica, and mother. Jessica and mother partnership. Jessica and mother partnership. Computation of taxable profit. Taxable profit for the year ended 31st Dec 2020, and then you underline. So when you're doing questions on partnership, the first thing you check is whether the statement provided or the statement that is given, whether they have already computed the profit for you, isn't it? So here they have already computed the profit for us. So here we can write shillings and thousands. Shillings and thousands. So you start with the reported net profit, reported net loss here. It's a loss, isn't it? Reported net loss, which is 494,119.4. So this is in bracket. So you put it in bracket. And then when they have already computed the net profit for you or loss, it means there were some expenses deducted and income added to arrive at that particular figure. So we analyze those ones. So we add back what we call disallowable deductions. We add back what we call disallowable deductions. So you list. So you go item by item. You go to there. So less expenses. So the first expense there is purchases allowed. Purchases and sales are inclusive, but not number one affects the purchases. So when you pick an expense, you check alongside the additional information. So we have purchases. So purchases, note number one, say purchases and sales are inclusive of V. So when you include VAT in purchases, it means you've treated VAT as part of purchases, and VAT is not purchases, isn't it? So you add back VAT in purchases. So you write here VAT in purchases. So the VAT amount is 16%. So it is 16 out of 116 times 4263. What it means, this 4263 is 116%, isn't it? Because it includes the VAT. So we are interested in 16%, which you're saying is not allowed. So how much do you get? 788. So 588. Sasa. So you add back 588. And then number two, purchase of computer software. Computer software is not allowed. So you add back computer software. Computer software, which is how much? 324. So you add back 324. That one is not allowed. That is our capital items. Then we have partners' salary. Partners, that one is not allowed. Partners' salaries, which is how much? 1296. So you add back 1296. Legal expenses. Legal expenses is allowed, but you have been given the breakdown of legal expenses in note number 3, which says legal expenses comprise legal fees on defense against alleged breach of trade. So that one is not allowed. So legal expense, legal cost on breach of trade contract. That one is not allowed, which is 180. And then legal fees on tax objection and appeal. Legal fees on tax objections and appeal not allowed. Tax objection and appeal, which is 164 point. That one is not allowed. And then conveyance fees, legal fee on conveyance fees, legal fees on conveyance. Conveyance, that one is not allowed. Conveyance fees, which is how much? 72.4. Stamp duty on stamp duty. Legal fee on stamp duty not allowed, which is 136.6. Legal fees on negotiating a business loan. Which is how much? 120.8. Recovery of bad debts allowable. Recovery of bad debt is, that one is related to business. So legal fees on recovery of bad debt is allowable. Signing a 100-year lease agreement, isn't it? Legal fees on 100 years lease agreement. Remember, legal fees on lease agreement that is less than 100 years is allowed. Which is how much? 128.4. Purchase of partners private, legal fees on purchase of private residence. How much is it? 1 fee? 150. Legal fees on renewal of patent is a capital item, isn't it? So that is on renewal of patent. One, 126. So that is all those are not allowed. And then after legal fees, we have repairs expenses. Repairs, we have been given the breakdown on repairs in note number 4. Repairs expenses include purchase of furniture. Purchase of furniture not allowed. So rather purchase of furniture, which is how much? Purchase of furniture is how much? 460. Installation of neon sign, that is not allowed. Installation of neon sign. Neon sign is a capital item. How much is it? 260. Design of office block, that is capital item, isn't it? Design of office block, which is how much? 140. Cost of partitioning office block, that is capital. Partitioning office block. Office block, how much is it? 141. Repainting of office block, that is revenue expenditure, that is allowed. That is allowed. We continue. Next is general expenses. General expenses include impairment of patent. Impairment of patent not allowed. Impairment of patent. How much is it? Impairment of patent gapi? 144. So that one is not allowed. So 144. Provision for general provision for bad debts, not allowed. Provision for bad debts. How much is it? 148. And drawings of goods by drawings, which is 568. So we are through with general expenses. Motor vehicle expenses allowed, unless there's a note telling us about it. Then insurance. So to mend and bill, to mend repairs, rent and rates allowed, isn't it? General expenses to now motor vehicle, interest on loan. Interest on loan include interest on partners' capital. Interest on capital, interest on capital. That one is not allowed. Of how much? 120. And then we have motor vehicle general expenses, interest on loan, general expenses to Mazana, motor vehicle expenses, insurance allowed, preliminary expenses not allowed. Preliminary expenses not allowed. How much is it? 470. So 473. Audit and accountants fees. That is allowed. And then debenture interest. So the partners don't issue debentures. So that one is not allowed. Debenture interest. How much is it? 1,800, isn't it? Traveling expenses allowed. So traveling expenses allowed. Director's fees, where is it? Director's fees allowed. Director's fees, it's not allowed. This is a partnership business, isn't it? Director's fees. How much is it? 10? Then we go to note number 1. Note number 2, closing stock was valued at 1840. While opening stock was valued at 10% of the net. So here we come here, we determine the closing stock. So sales value, our sales value is going to be, so sales is equals to 86,78,000, which we have been told it is 116%. It includes sales. So let us get sales without VAT, which is 100%. So 100 over 116 times 867,000. How much is that? That is the net sales without VAT. This was pilot paper, isn't it? Huh? Ilikuwa pilot paper. Huh? 74? 034. So that is, so we can write here 5, isn't it? Can round it off. So closing stock is valued at opening stock. So opening stock, therefore, it will be 10% of 74,810. So 10% of that, which is 74,810.4, isn't it? So this is the net sales, and 10% of that is the closing stock. So now we have been told both stocks are undervalued by 10%. So when you undervalue your stocks, what is, so here you come just do analysis here. You have undervalued your stocks. So say here sales is 10, opening stock 4, purchases 4, closing stock 2. 4 plus 4, 8, minus 2, 6. So our gross profit here is how much? 4. Now you undervalue this one by any digit, say 3. Instead of 4, you put it as 3. You want to see the impact on profit. 3 plus 4, 7. 7 minus 2, 5, isn't it? 10 minus 5. So when you undervalue your opening stock, it means that undervaluation is treated as an income. So you're going to deduct, isn't it? When you undervalue your opening stock, you increase your profits. So the undervaluation of opening stock is going to be deducted. It's going to be, it's going to be deducted. Okay, let us undervalue this one, the closing stock. So we undervalue it by 1. 4 plus 4, 8. Minus 1, 7. So 7 here, it is 3. So when you undervalue your closing stock, it means you are reducing your profit. So that one has been treated as an expense. So we add back undervalued closing stock. So the closing stock is 1840. So this is 1840. This is the closing stock. It's undervalued by, so this one is equivalent to 90%. So what is 10%? It's undervalued. So it will be 10 over 90 times 1840. So how much do you get? That one you add back. Huh? 12.4. 204. So you add back 204. Tumeelewana? And then we less omitted allowable. We less omitted allowable deductions. Omitted allowable deductions. So there was no investment allowance here. There is investment allowance. There is investment allowance on furniture. Is it furniture? So we have computer software, which is 25% of 324. And then there also furniture, which is 25% of 460. Sorry, 10% of 460. And then partition, which is 10% of 141. Then there is the installation of neon sign. Installation of neon sign, which is 10% of 260. Then there's a design of office block. Design of office block. Design of office block, which is 10% of 140. So those are the capital items. So this one, how much do you get? Huh? This one is 81. Then you less non-taxable income. You less non-taxable income. So you go to the income section, you identify those incomes that are not taxable. So general bad debt reduction, that was not taxable. General bad debts reduction. That is not taxable, which is 8678. So you less that one. Unrealized foreign exchange gain, that is not taxable. Unrealized foreign exchange gain. Unrealized foreign exchange gain, that one is not taxable. 112 you deduct. Capital gains on sale of shares, not taxable. Capital gain on sale of shares. Which is how much? Is it 270? Or you're not saying? Then recovery from insurance on stolen stock, that one is taxable. discount received, that is taxable. And then you less income from specified sources, income from specified sources. Income from specified sources. So we have dividend from dividend here. Dividend is how much? 51. So you less 51. You get the adjusted taxable profit. Adjusted taxable profit or loss. Adjusted taxable profit or loss. So, but you will not add. You take years to add, isn't it? You will refuse to add. Now, because you will refuse to add, because you will refuse to do the computation, what am I expected to do? Should I stop at that point? Are you going to add? Anything that is not clear? Or you want to give? You have them. 8678. Or there is also VAT in sales. Yeah, there is VAT in sales, sorry. We had VAT in sales, sorry. VAT in, oh, there is omission here. Okay, there are things we have omitted here. Sorry for that. We have VAT in sales, that is non-taxable VAT in sales, sorry, which is 16 over 116 times 86, 78,000. And then undervalued opening stock, isn't it? Undervalued opening stock. So it was of undervalued, it will be 10 over 90 times the opening stock is 74, 81, 74, 8104. And then we less incomes from specified sources. We less income from specified sources, we have a dividend here. We less dividend, which is 51. So we less dividend here. So which figure have you computed? Any figure that is computed? Nani amefanya hesabu? Computer software ni ngapi? 81. So this one you deduct 81 and 46. This one 14.1. This other one 26. This one 14. So nani amefanya adjustment, adjust the taxable income yake? Hii ni gani? Hii ni 112. Hiyo ndio 112 hapa. Hapa ni 112 na hapa 270 na hapa 528. Hivyo. Haya. So adjusted taxable profit ni ngapi? Adjusted profit hapa ni ngapi? Adjusted profit ngapi? Smart days recovered in income. Iko wapi? Ati? Hapana, sio legal expenses wanakuambia tu walitumia illegal cost kwenda ku recover debt. It was a cause that they used to go and recover a debt. It's not that it is a debt that was recovered. It was just cause that was incurred in pursuing a bad debt, which you are saying is allowed. It's not an income. Any question? Anything that is not clear? Preliminary expenses are not allowed. Sawa. Aya, when you nani ame add? Ubaini mnachukua muda mrefu ku add bana. Mnasikia njaa? 2283.4. Ako salama. You adding all this, umesema amepata positive. So here you come here and prepare what we call partners allocation schedule. Allocation schedule. So there are how many partners? Kuna Jessica na kuna alafu hiyo unaweka totals. So shillings and thousands. These are in thousands. You can write here shillings and thousands. So here you give them their benefits from the partnership. You give them the benefit from the partnership. So there is the partner salary. Partners. So there's the salaries here. So where you have been given the salaries as a lump sum figure that you're supposed to share among the partners, they have not given you the breakdown of each partner, how much is getting or she's getting. So you share it in accordance with your profit and sharing ratio. If there's no ratio, you share it equally. So they share profit in the ratio of 3:2. So 3 out of 5 times the amount that is indicated as partners' salaries, which is 1296. So what will be the value for Jessica? 1296. 7.6. And then for mother, 583. 518.4. We have interest on capital. Interest on capital. Interest on capital was not number 6. Interest on capital was 120. So 120, you share it. 3:5 of 2:5. What do you get? 72.70. 48. That is interest on capital. Any other benefit? So if you have interest on drawings, you deduct here. If you have interest on drawings, you deduct here. We don't have here in this question. And then here we say share of profit stroke loss. And then we have adjusted profit stroke loss. So it was 2283, 22. So you take this figure, you deduct this 2. If whatever you get here is positive, you share it as profit. If it is negative, you share it as loss. So you take this adjusted profit, you deduct these 2 items, and then you share. So how much you get? 867? 867.4. You share that one as profit, is positive. You share it as profit. 520.4. The other one? 307. 347. 340.6. Ew. And then now you add them downwardly. And then you write here other incomes. Other incomes. So we have dividend. So the dividend was how much? 51. So if you're not written there net, you assume that one is gross. So you share the dividend. 30.6, and the other one 20.4. And then now you get the total taxable income. Total taxable income. So you add all this, and then you get the total taxable income. You add this all the way to this, all this. If you happen to generate a loss here, you don't offset it from the other incomes. So you only take the dividend. So that is how we do this question on partnership. That is how you do this question. So you also do one for me. I do one, you do another one, isn't it? We reinforce each other. So now before we close our class today, now, because you people don't do assignments at home. So we attempt this one. We attempt this one very fast. Question on partnership. So tulifanya hii May 2021 question number 5C. May 2021 question number 5C. So can you attempt May 2021 question number 5C right now? May 2021 question number 5 before you go for lunch. Whoever gets this right, ananunuliwa lunch. Ule anapata wrong, ananunua lunch. Sindio? So if you get it right, you get lunch. If you get it wrong, you cough 100 for lunch. So now sasa ule mwenye anapata anapewa lunch ya 100 na mwenye anaamka anapeana lunch ya simple. Ama namna gani? So wewe jaribu upate lunch. Hata mimi nitakuwa nikitoa. Ule anapata pia mimi natoa. Ule anaanguka tunapatia ule amepata, si ndio? So May 2021 question number 5C right away. So we are doing a questions also online. You can also do it and scan and give it to us. Sasa uko na question paper? TD iko wapi? Uko na hiyo past papers? Na TD tu hauna? Oh, sawa. Sawa acha ni. Ndakutumia sasa. Fanyanga hiyo paper kwanza. Sawa acha ni watafutie hizo papers.
Hello. Umeweza kuniambia?
Tumie ka message.